Hi everyone, welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather. It's the 2nd of February, so we just finished the month of January, so we're going to look at the monthly chart. We're going to have a look at which of the predictions we were right with and which we were wrong with, and get a bit of an idea for next month. This report, we're going to kick off with the DAX 40 futures. So let's go and take a look. Hopefully at the end of the week, you're starting to do your own kind of weekly review. I like to go through all the trades that I've done, how I went against my trading plan, look at my journal, anything I noticed, looking at areas that I can improve, whatever I'm researching at the time. But the market update is a way I can practice my ability to read higher time frame price action and then how it impacts my day trading. So I've got the monthly chart here, and let's just take a look at where we are. So we had quite a big trading range in here, and looks like the market's done part of a measured move to get up there. That's around about 22,000, which makes sense. It's not an exact measured move, but you're just looking at this trading range and a possible breakout above. We're in a bull channel. Okay, so we're in a bull channel. And if you put one of the channel lines on the moving average, you can put it there, you can put it there. Traders took profits on the top part of that channel and some bears shorted. But what we said coming into the end of the year was this bear bar did not attract any sellers below the low. This bear bar did not attract any sellers below the low either. The only bear bar that had sellers below its low was there. So if you did sell below there saying, oh, it's a possible wedge top, probably going to get a bit of sideways to the moving average, and you get this bar, this is what we call a possible bear trap because it's triggered the sells and it's closed on its high. So there's a good chance we're going to go above there. What do those bears do? Well, I think some of those bears sold exactly at 1 times that bar distance. You can see how you have to sell there and then sell again there where the red line is. And if we zoom in, those bears were actually able to get out break even because this bar crossed over the red line. So if you were to sell there and sell there, you'd exactly get break even. At every bar on the chart, there is an institutional level of volume, which means there have got to be buyers and sellers. I actually think more of the sellers here sell above the bar and then sell higher. So you don't take this entry, you basically take the scale in. So limit order bears who sold above or sold higher actually made money. If you're short and you see these two bars, what I actually think is a better way to manage that trade is to exit and potentially reverse on this bar. Perhaps as it goes above the high of that bar, some traders might buy the close there, or they'll wait and see during this bar what happens. So if you get rid of those bears and you get rid of those bears, I think all these bears have got stuck, and that's why we've had such a big monthly bar here as we went above the high of this wick. Now, what do we do as newer traders when we see bear bars in a tight channel? Well, we're always thinking about risk and not probability, and so these are weak bears who are getting stopped out. Stronger bulls are buying and buying lower, betting that there's more chance we're going to go out of the top of this channel as opposed to the lower part of this channel. So what do you do now? We've got a huge bull bar closing near its high. Well, February is very important. Traders pay attention to how the market reacts to this breakout. Is it going to be a breakout that leaves a gap, in which case this gap can be open for potential measured move? Or is next month going to form some kind of a bear bar and overlap this gap, which gives it more chance of it being an exhaustion gap and leading to a couple of legs sideways to down. Because I think this was a potential wedge or at least a double top that failed, there's now a test target around this price. The market spent a lot of time at 18,000, 19,000. It spent only a couple of bars here at 20,000. It rocketed through 21 and it looks like it's going to head up to 22. I would be very surprised if we don't come back and test all of these prices, but we don't have to test them now. We can keep going up for 10 more bars before we start to go sideways. When traders look at a channel, I think some traders look at a measured move of that channel, and we're up nearly at 50% of that channel, which is a common place to pull back. If this is going to be a new spike, bull channels have about a 25% chance of having a bull breakout. So you've got spike, pullback, and channel of having a spike, pullback, and then another channel up. They typically fail within about 5 bars and then form a trading range as the market decides what to do next. So this can keep going up for 5 more bars and then eventually come back to the middle of the channel and then often test all the way down to the other side of this channel. That would be your lower high. But one thing we do know about bull trends and head and shoulders top is that they're actually more often than not continuation patterns to go higher. So what do you do here? Well, it's certainly buy the close, but I wouldn't be buying all the way up here. I think we're far away from the moving average. And so I think it'd be better to wait for a breakout and a pullback entry. If this monthly bar gets some kind of bull bar follow through, it might attract more buyers, but I think the target is 22,000. I think the swing buy was above September. Here was a breakout pullback. It's basically a new high inside bar. So that's a high one buy, and this is a high two. Why is it a high two? It's basically the second buy signal in a row here. If you didn't count that as the high two, well, then you've got a new high and a pullback. You can also argue that's a high one there, and that would put your target a little bit higher, up at 22,351. That was a close above the high of a prior range, expecting some kind of a measured move. Other traders might not have used that measured move and instead used above this bar, in which case they've already got one-to-one, they've already got a close, so they might even wait for more. So next month, I think we're going to go at least trigger this bar and get 22,000 on index futures. But I think we'll need to test down to this gap at some point, maybe even a small bear inside bar, or at least some tails below, give the bears a chance to test that and fail instead of more up. But all these bars are very small, and this is the biggest bar late in a bull channel. That can often attract a lot of profit taking, and I think traders will see it as a climax. So that's on the monthly chart. So here's FDAX on the weekly chart. So this bar here broke to a new high. Maybe it triggered and you could have bought the close. If you bought one tick above that high, your target is 21,960. So you needed to go to 22,000 to get your 1R. If you didn't buy that bar and instead bought the next bar, your target is 22,030. So a couple of these bull bars really need 22,000 as their target. You've got 4 consecutive bull bars, which is a bull micro channel. So the first attempt to reverse this is likely to fail. There's going to be buyers under this bar and buyers under this bar, and we have a gap sitting below here. We spoke about this on the monthly chart. This was potentially a wedge. You can see on the weekly it was more clear. This bear bar triggered, this bear bar triggered. When I say triggered, I mean it went one tick below that bar, so it was possible to sell on a stop. But there was a problem with this. This signal was small, and then this signal didn't trigger, and this signal didn't trigger. Now, often if you're looking at a reversal and you're flat and you say, okay, had I taken that trade and I didn't get follow through below that bar, what would I do? Well, if I was short on this bar here and I didn't get follow through, then I would typically get out as we go above this bar. If you didn't get out above that bar, you definitely need to get out on the close of this bar. So I think there are bears who had to get out of that trade. If a trader buys as the price goes above this pullback, a measured move from the bottom of that pullback is usually a good place for a target, which was 21,672. And that was a target I've been mentioning for the past couple of weeks when we were wondering what was going to happen here. This bull bar closed, and I actually thought that that week was going to get some kind of a pullback because I thought this bar was pretty big. But when it got follow through as well, now if you're a bear, you've got nowhere to scale in. Both bulls and bears became buyers during this bar, and now the likelihood is you're going up for a measured move. Some traders might have seen this as the spike, and their target's about 22,145. So still some targets above. One thing we have to be careful about this is every trade has two sides. If you were to buy up here, you've basically got about 3 bar ranges all the way back to the moving average. So that is the biggest above the moving average we've seen. Okay, so I've got the measured move target here. So see if you can find a bull bar that's that far above the moving average. And I'm all the way back in 2018 and I can't find any. So this is the biggest moving average gap we've had on DAX, bearing in mind that this is a continuous contract chart, and so it is, updated the back part of the chart, but this is very climactic. So I think this is a gift for bulls. I think if you do want to participate in this move, well, if you've got 4 bull bars, so you're buying late, a 50% pullback is back here, which is back at 21,000. So what do bears do in this place? Well, some bears will say, well, I'll take that action. If I sell up here or I see one bear bar, I'm going to start scaling into shorts because their risk can be very small and their target is all the way back at this gap. This gap in between the 2 weeks can be a measuring gap which taking us to 22,100. But I suspect there will be bears here and higher, betting on a swing back to close these gaps. Just like we said on the monthly chart, the weekly charts, any bull breakout of a bull channel has about a 25% chance of forming a new bull spike and a bull channel, and we're up at 50% of this channel. So if this is the spike, this should form a channel. One thing I pay attention to is the tail on this bar. So the pullback on this last weekly bar was nearly 2/3 of that bar. So on a smaller time frame, it's actually turned into a trading range. So always in long, better to be long or flat, nothing to sell here. Well, thanks very much for watching. I hope you found that valuable. If you're in the Books Price Action live trading room, it's a free day tomorrow, so you'll be able to catch me tomorrow night. If you're not in the Price Action trading room, then I'll catch you next weekend. Have a great trading week, and I'll see you then.